What I'm thinking of doing today is study Siena Corporation, and now this one stock has skyrocketed. In September, it was trading at about $94 a share, and it went parabolic. And today is trading at over $300 a share. So I'm thinking about shorting it, or I can buy a put option against it and see if I can profit that way, because I believe this one stock got involved into the AI bubble, and possibly it's due for a crash. This stock in 2025 in April was about $50 a share. Then it climbed to 80, 82, and now it's trading at 4 times there. Wow. So the financials looks pretty good. This is the annual income statement. Sales have been growing steadily. The net income, out of $4 billion in sales, they clear only 123 million, which is not very much. Now, back in 2023, they cleared 254 million, and back in 2021, they clear about $500 million on a revenue of about $3.5 billion. Balance sheet, how much they got in the bank? They got about 1.5 billion in the bank, which is good money, but it's not a lot for a company of that size. And on the cash flow from investing activity, 242 million. Cash flow from financing activities, of course, negative 405 million. Net cash flow 150 to 160 million. 2022 they lost nearly $500 million. 2024 they lost nearly 76 million. So let's look at the options on this. If I was to buy a put, and I'm gonna write it all the way out, I'm gonna go all the way out to January 2028. I was to buy a put at 80. That's gonna cost me just a little under $1,100, because this is 1090 each contract, or rather each share, and one contract is 100 shares, so that's gonna put me at nearly 1,100. I think it's quite appealing, because from here to January 2028 anything can happen. Stock market can correct or can even crash. This all AI boom might actually bust by then. So $80 will be the strike price. Now, of course, today this thing is trading at over $300, but I'm not planning on exercise the option. I'm only planning on trading it and make a little bit of money off of it, I can possibly make 30-40% of my money on that. I mean, it's not very much, but I think I'm gonna go ahead and do it. Also, I wanted to ask Gemini what they think about Siena Corporation, and I was actually asked the recent insider trading activities on Siena, and let me see what it says.
Insider activity at Siena Corporation, CIEN, has been very high in late 2025 and early 2026, characterized almost exclusively by selling. This activity comes as the stock has surged over 200% in the last year, reaching all-time highs near $300 per share. Here is the breakdown of the recent insider movement. Recent notable sales, January to February 2026. The most significant activity has come from the top of the organization. All of these transactions were executed under prearranged 10B 5-to-1 trading plans. Gary Smith, CEO, the most active seller, February 2nd, 2026, sold 2,952 shares at an average price of $265.60. January 15th, 2026, sold 2,993 shares at an average price of $247.65. January 5th, 2026, executed a massive sale of 83,552 shares, totaling approximately $19.17 million. Jason Phipps, SVP Global Sales, * January 12th, 2026, sold 21,383 shares for roughly $5.3 million. Joseph Cumello, SVP Blue Planet, January 12th, 2026, sold 11,929 shares, totaling $2.74 million. Brody Gage, SVP Global Products, frequent small batch sales throughout late 2025 and January 2026, totaling over 1,500 shares. The context: why the selling? It is important to look at why this is happening before sounding the alarm. 1. Profit taking at record highs. CIEN's market cap has exploded from 12 BTO over *40 beams * in the last 14 months. Insiders are essentially locking in gains on their compensation packages.
Well, some of those sales were already pre-planned, but regardless, insiders are selling by the bulk, and the CEO, which is Gary Smith, he sold a whole bunch of shares at an average price of $265 a share. All of those insiders were selling shares at a lower price than the stock is trading today. And what that tells me is that they don't even know why the stock is trading at this ridiculously high valuation, $300 a share today. Let me ask Gemini, can you make the bull and the bear case for Siena Corporation, CREN?
As of mid-February 2026, Siena Corporation, CIEEN, has transitioned from a traditional telecom player to a high-flying AI infrastructure stock. Having recently joined the S&P 500 and seen its share price surge over 200% in the last year, the debate between bulls and bears is centered on whether the AI networking cycle is just beginning or already fully priced in. The bull case: the nervous system of AI, massive order backlog. Siena entered 2026 with a staggering 7.8 billion IN orders and a 5 billion backlog. This provides rare multi-year revenue visibility, giving the company a massive buffer against short-term market volatility. Technological lead, WaveLogic 6. Analysts estimate Siena holds a 12 to 18 month innovation lead in 1.6T terabit optics. Its ability to deliver high speeds on a single wavelength reduces power consumption, a top priority for AI data centers run by hyperscalers like Meta and Google. Market share gains. According to BofA, Ciena's share of the global optical networking market rose to 22% in late 2025. With Huawei largely excluded from Western markets, Ciena is the primary beneficiary of rip and replace geopolitical trends. Expansion beyond the box. Ciena is successfully moving into Blue Planet software and routing/switching, diversifying away from pure optical hardware into higher margin recurring revenue. The bear case. Peak everything. Demanding valuation. Trading near $300 with a forward PE that has expanded significantly, some metrics showing over 50x. Bears argue the easy money has been made. The stock is currently trading well above its historical average multiples. Customer concentration risk. A huge portion of CIEN's revenue is tied to just a handful of cloud giants. If even one hyperscaler, e.g., Microsoft or AWS, pauses its capex to digest existing capacity, Ciena's growth could stall instantly. Competitive consolidation. The Nokia-Infinera merger, completed in 2025, has created a formidable rival. Nokia now matches Ciena's global market share, approximately 20%, and has the scale to compete on price in large-scale deployments. Margin pressure. While revenue is growing, Ciena is facing rising 3nm chip costs and higher supply chain expenses. Bears worry that operating margins, targeted at approximately 17% for 2026, may have already peaked. Investment sentiment and price targets. Scenario: 2026 price target range. Core thesis: bull case, $305 to $320.
So basically, in the bull case scenario, the target price is 305 to 320. That's about what Ciena is trading right now, and that would be the 2026 year-end price target. And then the consensus is 247 to 260, the bear case 190 to 215.
AI data center demand continues to accelerate. 1.6T rollout exceeds expectations. Consensus $247 to $260. Solid execution, but stock chops sideways to allow valuation to catch up to earnings. Bear case $190 to $215. Cloud capex lull occurs. Nokia-Infinera wins major contracts on price. Summary table. CIEN at a glance. February 2026. Recent price. $293. 2026 revenue guidance. $5.7 billion. $6.1 billion. Up approximately 24% YoY. Insider sentiment. Heavy selling. Mostly 10b5 to 1 profit taking at record highs. Institutional sentiment. Increasing. Index inclusion driving forced buying from ETFs. Would you like me to look into the specific technical indicators, RSI moving averages, to see if the stock is currently in overbought territory?
Yes, please. You got a price to sell, a forward price to sales of nearly 7, and the trailing 12-month price to sales nearly 9. Price to book 15.
As of mid-February 2026, the technical profile for Ciena Corporation, CIEN, shows a stock that is currently in a quote momentum melt-up, following its inclusion in the S&P 500 and a massive 200% plus run over the last year. The indicators suggest the stock is very strong, but potentially stretched in the short term. 1. Technical indicators, overbought or just strong. Relative Strength Index, RSI. The 14-day RSI is currently hovering between 67 and 70. Interpretation. Traditionally, and RSI over 70 is considered overbought. CIN is right on the edge. This suggests the buying pressure is intense, but the risk of a mean reversion, a temporary pullback to catch its breath, is increasing. Moving averages, golden alignment. 50-day MA, tilde $239. 200-day MA, tilde $177. The stock is trading well above both, around $293. This is a textbook bullish alignment, but the wide gap between the current price and the 200-day average indicates the stock is vertically extended. Bollinger Bands. CIEN recently touched its upper Bollinger Band near $298. Usually, when a stock hits the upper band, it either rides the band higher in a massive squeeze or pulls back toward the middle band, currently around 250 minus 260. 2. Analyst consensus and price gap. There is a fascinating valuation gap occurring right now between the market price and analyst targets. Average analyst target, $241.67. Current price, tilde $293. The disconnect. Wall Street analysts are currently trailing the price action. Because the stock moved so fast, most average price targets actually imply a 15 to 17% downside. However, top-tier bulls, like Rosenblatt, have recently hiked their targets to $305, suggesting there is still a little room left in this current leg of the rally. 3. Support and resistance levels. If you are looking for an entry point or a place to set a stop loss, keep these levels in mind. Immediate resistance, $300 to $305. This is a massive psychological round number, and the current ceiling set by the most bullish analysts. Primary support, $265 to $270. This was the recent breakout level. If the stock pulls back, bulls will likely step in here. Major floor, $240. This aligns with the 50-day moving average. A drop below this would signal that the AI infrastructure hype is cooling off. The verdict for February 2026. CIEN is a momentum play. From a technical
This stock, in my opinion, is way overvalued and overbought. Just look at this. The difference to the 5-year average on the price to cash flow, 75%, 98%, price to book 280%, trailing 12 months 312%. Compared to the sector, look at the price to cash flow, 214% over to the sector average, which the whole sector as a whole is way overvalued, or at least high priced. 327 price to book, trailing to a month compared to the sector. I think I'm gonna go ahead and buy a put. The other one was Momentum Holdings. I already bought a put on that one a few days ago, and today is down nearly 5%. Those stocks are way overvalued in my opinion. Now, could that be that AI is gonna change the world and all that? Yes, but you know, we are in uncharted overvaluation territory, in my opinion, for some of the stocks. Okay, so what I'm gonna do, I'm gonna go ahead and log in to my Fidelity account, and I'm gonna buy a put, and I'm gonna show you guys how this is done, and hopefully this is gonna be helpful. One last question I was gonna ask Gemini is, what are your takes about buying a put option with Ciena, CIEN, with an expiration date of January 2028?
January 2028 call option, LEAPS, for Sienna, CIE, is a high conviction bet that the AI networking supercycle is only.
No, I meant buying a put option.
Buying a January 2028 put option for Sienna, CIEN, is a strategic bet that the stock is currently in a speculative AI bubble that will burst or significantly correct within the next 2 years. As of mid-February 2026, CIEN is trading near $293, sitting at a historically high forward PE of roughly 40x, 45x, double its 10-year average. 1. The bear case. Why buy a 2028 put? The peak AI reversal. Much of Sienna's recent surge is based on a massive order backlog, $5 billion. Bears argue that once the initial build-out phase for AI data centers is finished in 2026, cloud giants, Microsoft, Meta, Google, will pause their spending to digest that capacity. This happened to CIEN in 2022, causing the stock to tank 12% almost overnight. Valuation gravity. Sienna is currently priced for perfection. Any miss in quarterly margins or a slight delay in the WaveLogic 6 rollout could lead to a rapid valuation derating, pulling the stock back toward its historical 180-210 range. Consolidated competition. The newly formed Nokia Infinera giant is now fully integrated. They may start winning back market share through aggressive pricing, squeezing Sienna's margins in 2027. 2. The mechanics. 2028 put options. Buying a January 2028 put gives you a long time to be right, but it comes with a high cost. Current implied volatility, IV, CIEN's IV, is in the 99th percentile, approximately 91%. This means put options are extremely expensive right now. You are paying a high fear premium, the break-even hurdle. If you buy a 250 strike put for January 2028, IT might cost you around $45.00, $4,500 per contract. Break even. The stock must fall below $205 by January 2028 just for you to start making a profit. That is a 30% drop from today's price. 3. Strategic ways to play the bear side. Strategy. Risk level. How it works. Long put. High. Buy a Jan $2,028, 260 put. You profit if CIEN crashes hard, below $200. Very expensive due to high IV. Bear put spread. Moderate. Buy a $270 put and sell a $220 put. This lowers your cost and offsets the high IV, but caps your profit if the stock goes to zero. Put back spread. Complex. Sell one $280 put and buy two $240 puts. You profit if the stock stays flat, minor gain, or if it craters, major gain. 4. Technical red flags to watch. If you are waiting for the perfect moment to buy your put, watch for these technical breakdowns. 1. RSI divergence. If the stock hits $305, but the RSI, Relative Strength Index, stays below 60, it's a sign the trend is exhausted. 2. 50-day moving average break. If CIEN closes below $278, it marks the first time in months it has lost its short-term momentum. This is often the signal bears look for to enter. 3. Insider selling acceleration. As noted before, the CEO and SVPs have been dumping millions in stock at $290 plus. If this selling continues as the stock drops, it shows management doesn't see a quick recovery. The verdict: buying a 2028 put is a smart way to hedge a portfolio or bet on a cyclical downturn. But buying it today is expensive because everyone is currently watching for a pullback. Would you like me to find the current open interest on the 2028 puts to see if other...
Yes, please.
As of mid-February 2026, looking at the January 21st, 2028 put options for Ciena, CIEN, the smart money is starting to cluster around a few specific levels. Since the stock is currently trading near all-time highs, $293, the open interest reveals a growing hedge against a significant AI infrastructure cool-off in 2027. 1. Open interest OI analysis. Where are the bets? For the January 2028 expiration, there is a notable concentration of volume in the following areas. The $240 strike, deep out of the money. This is the highest volume area for 2028 puts. Over 2,000 contracts are open here. Sentiment. This represents a bet that CIEN will revert to its pre-AI craze valuation. Many investors use this strike as disaster insurance or a bet on a 20% correction. The $200 strike, the pre-breakout floor. There is significant whale activity here. Sentiment. Traded prices for these puts are relatively low, but the volume suggests institutional players are hedging against a full-scale sector rotation out of networking stocks. The put/call ratio. Currently, the OI put/call ratio for CIEN's long-term options is roughly 1.15. This is a slightly bearish signal, indicating that more traders are buying protection, puts, than speculative upside calls at these record prices. 2. Strategic perspective, buying the put now versus later. If you are looking to pull the trigger on a January 2028 put, here is how to navigate the current February 13th market environment. The volatility overhang. Because CIEN just had a massive run, the implied volatility IV is very high. If you buy a put today, you are paying a premium on top of a premium. Even if the stock drops slightly, if the market calms down, the value of your put could actually drop due to IV crush. The break-even reality. Example. A January 2028 250. Put IS currently trading around asterisk 44.00. Your break-even. $206. The stock has to fall 30% before this option is worth more than what you paid for it at expiration. 3. My recommendation, instead of buying a naked long put, which is very expensive right now, consider a bear put spread. 1. Buy the Jan $2028 260 put. 2. Sell the Jan $2028 210 put. Why? Selling the lower put helps finance the one you bought. It significantly lowers your cost and reduces your exposure to that high volatility. You won't make infinite money if CIEN goes to zero, but you will have a much higher probability of profit if the stock just has a standard 20% pullback. Would you like me to calculate the maximum profit and risk for a 260/210 bear put spread based on today's prices?
Yes, please.
A bear put spread is one of the smartest ways to handle a stock like Ciena, CIEN, in February 2026, because it allows you to bet on a correction while selling some of that sky-high volatility to someone else. Here is the breakdown of the risk and reward for a January 2028 bear put spread, based on the current market prices where CIEN is trading near $293. The setup. $260 per $210 bear put spread. Buy, long, 1 contract. Jan 2028 260 put. Approx. Cost times 82.00 asterisk asterisk. Sell, short, 1 contract. Jan 2028 210 put. Approx. Credit times 38.00 asterisk asterisk. Net debit, your total cost, times 44.00 per share, 4,400 total. 1. Maximum risk. $4,400. This is the absolute most you can lose. It happens if CIEN stays above $260 by January 2028. Because you paid for the spread, if both options expire worthless, you lose the initial investment. 2. Maximum profit, $600. Calculation, spread width, net debit, $260 to $210. 44.00 equals asterisk 6.00 per share times $600 per contract when it happens. This profit is realized if CIEN drops to $210 or lower by expiration. 3. The break-even point, $216. For this trade to be profitable at expiration, Sienna needs to fall significantly from its current $293 price. Calculation, long strike net debit, $260, 44 equals asterisk 216. Why this is better than just buying a $260 put? If you just bought the $260 put alone, cost $8,200 versus $4,400 for the spread. Break even. The stock would have to fall to $178 just for you to break even. Volatility. You would be extremely vulnerable to IV crush. If the stock drops to $230 but the market calms down, your single put could actually lose value. The spread protects you because the option you sold also loses value, offsetting your loss. The strategy verdict. This specific spread is a high probability, lower reward hedge. It's designed for someone who thinks Sienna will definitely correct, but might not crash to zero. It effectively bets that the AI networking fever will cool off and return CIEN to its historical valuation range of 180 minus 220. Would you like me to look at a wider spread, like 280-200, to see if the profit potential is higher? Or are you comfortable with this 260-210 defensive setup?
Okay, I'm getting ready here to place the order to buy a put on Sienna, and the expiration January 21st, 2028. The strike price 80. So now here is saying the maximum gain is $6,900. The maximum loss is about $1,100, which is what I'm paying, and the break-even price is Sienna at 69. Now, of course, I'm not gonna expect that, but I am going to see if I can trade the option, of course, before the expiration. Okay, so I'm gonna go ahead and do that. Okay, this is a buy to open, a put option. The strike price is 80. I'm gonna pay $1,100 today, and I'm gonna place the order. Okay, I'm done. Now we'll wait and see what's gonna happen here, and I just show you guys how you buy a put option. Now the other thing that I was gonna do is on a separate thing would be to sell a cover call against my XX Amazon long ETF AMZU. Like you guys saw, I bought 23 more shares. I already had 77 shares. I think the market is going down a little bit. Also Monday, February 16th, stock market is gonna be closed. On Monday, stock market is closed. Regardless, summary, let me check my positions here. AMZU, AMZU. Now this one I'm carrying it at 25 bucks with 31 cents. I am down a little bit on this one. I do have 100 shares. Today is trading at 25.03. So I think I'm gonna sell a cover call. I'm gonna sell a cover call on this one at about 26 strike, February 20th. Sell a call. Oh, March 20th. Let me see. If I were to put a strike price of 25, and I'm gonna sell the cover call a strike price of 25. This is gonna deposit 70 bucks in my account. Okay, and if I was to go, let me see if it lets me go out March 20th. This is gonna put 190 in my account. Well, I think and if I'm gonna sell it at 26, this is gonna put 145 in my account at 27,105. I think I'm gonna go with this March 20th. Sell AMZU at 27, let's say. Sell. This is gonna deposit about 105 bucks in my account March 20th. Okay, so I'm gonna sell to open one contract, sell a cover call, expiration March 20th, the strike is 27. I'm gonna put here Maca. Okay, they charge me 65 cents. The estimated proceeds are 104.35 today deposited in my account, and actually, yeah, it got filled. But regardless, I was gonna see primarily the Sienna thing there with buying the put option. Hopefully I'm gonna make money trading it. I got plenty time. There is an overbought, overvalued stock. I have time up until January 2028 to see what the stock price does, and as a result of that, what the option price does. Also, I was looking at a video of an interview with the Sienna CEO.
And Gary's been at the helm of Sienna for, I guess, 25 years. You know, it's one of the few guys to turn CEO when you're 21 or something like that.
I think it was 18. Yeah, I think it was 18. That's my story, and I'm sticking to it. Yeah.
So you're probably, I guess, in terms of companies, you're right at the center of everything that's going on right now, because you're actually the guy that builds bigger networks, right? How do you see the world right now? Is it getting bigger? Is it a big opportunity? Or are there challenges?
Well, we certainly, like to think we are. That's for sure. But we've driven a lot of the technology that's really enabled, the expansion that's gone on. In 100 gig, 400 gig, 800 gig, and we're just about to get to 1.6 terabits down a single piece of fiber. And so we've been at the forefront of driving that technology, but it's part of a much broader ecosystem. That really facilitated the scaling, essentially of the internet. And this sort of confluence of all the various technologies, the fiber cables, submarine cables, satellite, all coming together with mobile to kind of deliver this wonderful thing that we all enjoy today. And that's been a massive expansion over the last 20 years, really. It really has taken 20 years. I remember the first sort of coming of the internet in 2001, where we built all this capacity, and there was no business model to come on top of it. So I remember we had all that capacity we thought would never be sold in the next 30 years. Well, look what's happened.
Now, have you seen, obviously everyone talks about the sort of the movement towards the 3 or 4 big customers and then all the rest. Do you see that? If you start thinking about it, is that reality in your space as well? Is it becoming the big hyperscalers and then the telcos, or do you still see a broad market out there?
I still see a broad market for it, but if you look at both the direct business and the capacity that's being laid out there, the over-the-top content players who are driving the industry. That's for sure. And if you think about our business in particular, we get about a third of our business directly with them, and probably over half of that business, indirectly. So it's more than 50% of our business now, in various forms. So think data center connectivity, think long-haul networks, think submarine cables, terrestrial, or the international networks, places like India. So it's very much a multifaceted relationship.
And what is this? It's obviously a big group of our folks here are telcos. How do you think that bodes for the telcos of the future? Do you think it will be telcos supplying the fiber at the end of the day, or because one of the things we actually have a group that's talking about this at BTC, we call it under the top. Will they be under the top players? Will it be one of these big players that actually emerges as the infrastructure supplier? And there's no longer telcos. Is that possible, or do you think the telcos continue to exist?
I think it's certainly possible, but I think they absolutely continue to exist. I do, because you think about the amount of connectivity that's going to be needed. And this even before we start talking about things like AI and all that wonderful stuff. You're talking about basically getting capacity closer to the end user in pretty much all the applications, be it cloud, video, whatever it is. And even the content players, as omnipotent and massively resourced as they are, can't get to 8 billion people around the world in the way that is going to be required. So it's going to have to be an ecosystem to it. And you think about, many countries in the world, because of regulatory issues, they can't compete with carriers. So I think you're going to continue to see a sort of a hybrid type model. Now the issue is, what's the monetization, and where's the value to all of this, which is obviously the great debate and tension that's going on in our industry.
Let's switch gears a little bit. So you mentioned AI, right? Everyone's and that's the big 200-pound elephant in the room, right?
It'll never catch on, right?
Essentially, cloud growth is slowing down a bit, but AI is it's picking up the slack in a big way. But the difference is AI right now really there hasn't been a real profitable application. It's not like search or something like that. Coming into the tech sector, that generates a lot of cash. There's nothing, and it's a big capex burn right now, right? And it's where do you see it going? What do you think? When do you think AI becomes a profitable part of our ecosystem?
Well, I think in talking with the sort of, the content players who are really the epicenter of all of this, the sense that I get to it is that, ChatGPT is really sort of, as you and I were talking, the sort of appetizer to all of this, and some say, listen, AI's been around for a long time. ChatGPT was the first sort of thing that we could all relate to and was consumable, and you could touch and feel and play with, and it was fun. But even the monetization of that is, so I think, what's happening now is that the content players are, investing their resource in scaling their compute power in the data centers, ready and developing, other applications with AI to come out, into the world. And, I think in terms of timing, my sort of sense is, that continued investment in compute will happen over the next, say 24, this year. And then really as we get out of 24 into 25, my guess is that you start to see real other applications come out. Now, the question is, what's the monetization of those applications? And, I don't have any insight into that, but that's going to be the big question. And then, of course, the one that we're very vested in, what does that do to the network? Because you're going to have a lot of traffic. One would think it's going to create a sort of structure where you've got a lot of edge compute in there, so that's going to drive all the traffic to the edge of the network. And that's going to create an awful lot of traffic, the sort of killer app, if you like, for the internet, is how some people have expressed it. But that's all in front of us. But I think we're a little ways off. I mean, we are seeing, an engagement with various content players and start to think about, how will this impact the network? And I think the honest answer right now is, collectively, I don't think we know. I don't think we know. It's not a great answer, but I think it's...
No, I agree. It's because I've asked this question a few times, and there's no one that just sits there and says, oh, this is, purely biotechnology. I mean, there's so many sectors where obviously the ability to make analysis, or accelerate analysis, I think is going to have a meaningful impact on people's lives, right? And it's but I think it is. It's hard to kind of figure it all out, but it is. Obviously, it's driving some infrastructure. So you think that we're in a world of edge computing in the future, right? Is that?
Listen, I think this is with all the hyperbole and the rest of it, I think this is an absolute game changer. I do, and I think how I think about it is we've spent the last 20 years getting this infrastructure of the internet with mobility and submarine cables and the rates up, and so we can now do video to our phones and all the rest of it. I think about it, that's just the platform that we've created. Now, with AI in its various forms, I think we'll look back in 10 years from now and say that was really when it all took off. Which is, I think, for those of us who've been in the industry for a while, an interesting point. We think we've come a long way, and we have. I don't think we've really seen anything yet.
We have probably 70 emerging markets, people, telcos here. Think about it, it's, for some of these markets, how do they get there? I mean, it's sort of an interesting, because the infrastructure isn't free, it's actually at today's prices, it's not at, and will there be haves and have-nots just because of the way they developed it? It's a little bit scary when you start thinking about it, because even when it comes to AI, will the platforms be the same and at the same cost structure for these various players, right?
Well, I mean, I think, from what I understand, they're working on a lot of stuff that, where the mobile stuff could be, enhanced so they could get the experience to it. But at the end of the day, it's got to be over fiber. And yes, it's got to be augmented with satellite and mobile and all these other things. But really, the essence of it, in terms of high-speed, reliable capacity to the, it's got to be fiber. And that takes a lot of infrastructure build and expense.
Thank you, Gary, for spending time with us at PPC, and have a great show.
Thank you. Appreciate it.